And so for those who are interested in up to at least, I say up to at least, but for many, we try to reverse engineer it so you're getting the maximum possible deduction through this supercharged charitable tax deduction. And we do it with minerals. What are these minerals used for and where do they go and how do you get the deduction? We're going to cover all of those items here today in this presentation. Who am I? My name is Jake Miller, and I've helped coach CPAs, financial advisors, and every now and then an attorney. Very beneficial high level tax strategies. Everything from what is a deferred sales trust to the correct and proper way to take advantage of the tax deductions for business owners through micro captives and much, much more. This particular philanthropic participation is where you are able to purchase an LLC right now. This LLC is a series LLC, which means that there is a master LLC. And when I say master, think of like a parent LLC with a bunch of children LLCs, right? So this Delaware Master LLC and all of these children LLCs have been participating in the collection, gathering, and extracting of volcanic ash from the mountain. Volcanic ash is the prime ingredient in soil conditioner, also known as fertilizer. Fertilizer for people that have dirt that is otherwise unsuitable to grow things in. They need to add or provide this additive to their soil, which oftentimes is hard rock, clay, whatever. You mix in this good soil, this ultra rich fertilizer with this terrible clay, rock hard soil, whatever. And now you can grow tomatoes, fruits and vegetables, things that can help a society or a community become self reliant and not have to just import all their food from out of their country, such as Haiti. The philanthropic process here is that you're able to actually buy one of these LLCs that has been involved in this process for longer than a year. You can purchase this LLC, and at the end of the day, you check a box, or I guess in the application process, you check this box so that when the dirt from the mountain that is associated with your series LLC gets refined, sifted, sorted, packaged, well, now it's a 50-pound bag or several 50-pound bags or several 50-pound bags on a pallet or several pallets of 50-pound bags of fertilizer. And of course, all finished and done, it's worth more than what the LLC owned as a raw mountainous dirt. And so you can see that as time goes by and elapses, things are being done. There's an operation that turns the mountain dirt into a finished good product that is worth more. You are able to take advantage of that growth without having to pay taxes on it because you're going to donate it to a nonprofit, to a foundation. This foundation that supports people in Haiti become independent and self-sufficient by helping them grow their own fruits and vegetables. So this is our philanthropic partnership that aligns with tax incentives to turbocharge your ability. Because at the end of the day, you put your money in this, and let's say that you do 50,000, which is the minimum. You're going to go ahead and do $50,000. And that $50,000, by the time it ends up in packaged bags, so the dirt, filtered, strained, packaged, processed, loaded on pallets, out at the dock, up comes a certified appraiser. That certified appraiser then looks at everything that's going on the ship. He does his mathematics, he does his calculations, he does everything that he needs to do so that he can stamp his seal of approval and say, this donation is worth this much money at a bulk wholesale pricing. Now, again, if you were to take the same dirt that's now packaged and ready to go, if you were to sell it on eBay, you could probably get more than the value that the appraiser is going to put it at. The appraiser is going at bulk wholesale pricing. If you were to sell on eBay, that would be if you were to sell it on eBay, that would be retail pricing. So different pricing structure, but out of ultra conservatism, the pricing of everything being donated together is a much more conservative approach. And we like to be conservative when we're talking about very large tax deductions. Again, $50,000 or more. And we like to reverse engineer or calculate based on what your tax liability is, what the right number could be. And that needs to be on one-on-one discussion. But let's say you put in $50,000 at the end of the day, based on prior year appraisals, that could come in at a 4 times multiple, or that could give you a 4 times tax benefit or offset to your taxes, which again, $50,000 by four is $200,000. And $200,000, if you have an AGI of 1 million or an adjusted gross income or taxable income of $1 million, you would be able to decrease what's being taxed from 1 million all the way down to 800,000 with just a $50,000 participation purchase of an LLC that owns some mountain dirt that he then again goes through this process to improve upon what that dirt is to filter out a lot of the other stuff and get to the prime ingredient that we're looking for, which is volcanic ash, throw in a few other additives, and then package it in 50-pound bags. Now it's worth more, substantially more. But at the end of the day, we're going to donate it with everybody else. Your little series LLC with my little series LLC with everybody else's series LLC. We all load our pallets of fertilizer together up on the docks, gets appraised, goes on the ship, ends up in Haiti. Now the people have the means by which they can actually grow in that rock hard clay dirt that's left over after the tsunami took away all their topsoil. These tax incentives that are eligible through the government, because the government allows us to do things like this, we're benefiting other communities or we're benefiting our own community through strategies like this. And that's why they allow us to move money around in such a way that we get a deferral, a deduction, or an exemption. And in this particular strategy, we're getting a very nice charitable deduction on the improvements made on a product that originally didn't cost us as much, but over time and through this process, the value was improved upon, and we get the deduction of the assets that are essentially donated to the foundation, not our original cost of the LLC to participate. So let's run through a scenario. Let's say you have 500,000 that is taxable. Or let's say you're a W-2 income employee and you have 500,000 that comes to you on a W-2. And you're normally going to get taxed on that. Now, of course, there's standard deductions, all these other things, but let's just keep it simple and say $500,000, you're taxable. If you were to do the minimum, which is $50,000, that's going to give you a $200,000 offset. If we say that your income is only 500,000, 30% of your income, you're going to be capped at how much of that $200,000 offset you can receive to 30% of your income. 30% of 30% of $500,000 income is $150,000. So in participating in this program and buying that LLC for $50,000 and then getting the $200,000 offset, that $200,000 offset, you're able to take 150 of it this year and you don't lose the other 50. It rolls over next year. Another scenario, if you're making, let's say, $1 million and you put in 100,000, it's going to give you a $400,000 offset. If you're making $1 million, 30% of your AGI, 30% of your AGI, your taxable income is 300,000. So you're going to get a $400,000 offset where there's a threshold or limitation at 300, which means that this year you'll maximize up to the threshold of what you can take at 300 and have 100 that rolls over to next year. Actually reduce your AGI, or is it more of a tax reduction based on charitable donation? Joe, this is a non-cash charitable contribution that offsets AGI up to 30% of your taxable income. And so this you'll now be filling out Schedule A, itemized deductions, all of these other things. You do, if you're normally a standard deduction person, you lose the standard deduction because you're going over to the other side, the Schedule A. And then, of course, there's the additional forms that you have to fill out, plus add the appraisal and the supplemental documents that go along, explaining everything that's being done. And so this does complicate your tax returns a little bit, but we've been doing it not always with volcanic ash. We did it with magnesium a few years back. But I want to say that roughly this type of strategy for around 7 years, hundreds of clients have been very philanthropic and they've received this deduction since that time. I've had people put in the minimum, $50,000. So there's a question here from Demu about what people have done in the past. Depending on your taxable income, I've had some people put in as little as 50 because that's the minimum. And then I've had other people put in over $1 million. And again, if you feel confident enough that you'd like us to review your specific scenario to see if this is right for you, go ahead and just scan the QR code and jump on the calendar.